When charity turns to terror, a nation's financial fortress must stand firm. Today, we're going to dive into how Italy's really aggressive anti-money laundering system just delivered a major blow to a global terror network.
It's an incredible deep dive you've brought us because the sources, they don't just reveal a major law enforcement success. They're a crucial case study in what happens when, serious financial oversight meets a sophisticated criminal threat head on.
Absolutely. The focus is squarely on Italy's remarkably robust anti-money laundering and counterterrorism financing framework, the AML-CFT. We're looking at how its decades-long development, mostly against organized crime, really prepared it for this kind of threat.
And we're juxtaposing that with this very recent high-profile case involving Hamas terror funding that was operating right under the nose of international aid structures.
Exactly. So our mission is to unpack the mechanics of that Italian system. We want to show you exactly how that financial fortress made this massive takedown possible. And we should just jump right into the news hook because, the details here are staggering. Italian authorities recently arrested 9 suspects linked to this highly sophisticated multinational network, a network that allegedly funneled over 7 million euros.
Which is roughly 8.2 million US dollars.
Right. And all that was going to the Hamas military wing.
That figure alone, it just demands attention. But the real story here is the deceit involved. These networks, they weren't operating in the shadows. They were exploiting the public trust, the trust we all place in humanitarian organizations.
So they were using what looked like legitimate charities.
Exactly. The Beneficial Association of Solidarity with the Palestinian People, or ABSPP, and another one called the Golden Dome. These were specifically set up to masquerade as aid groups, to try and evade any financial scrutiny.
They're positioning themselves as collecting money for aid, but the reality, according to prosecutors, was far more sinister. We're talking about a massive structural diversion of capital. Our sources allege that over 71% of the donations were redirected.
71%.
Raised for civilians, for suffering Palestinian civilians, and instead systematically sent to Hamas's military apparatus, the Al-Qassam brigades.
Just think about the brazenness of that operation. 71%. This wasn't just about maintaining cash flow. The money was reportedly used to finance active terrorist operations and, chillingly, to provide financial support to the families of suicide bombers.
So it's an incentive structure.
It is. It serves a dual purpose, ensuring, as they say, logistical and ideological continuity for the terror group, all while incentivizing more violence.
And the scale of the state's response, it really reflects the severity of the threat. They didn't just make arrests, they delivered a financial shockwave.
Yeah.
They seized assets valued at more than 8 million euros.
Properties, frozen bank accounts, digital records.
This wasn't just catching a few people. This was a financial decapitation of a terror cell's operation on Italian soil. And that gets us to the big question. Why Italy? Why was their system the one to catch this?
Okay, so let's unpack this. Before we get lost in the specifics of the terror plot, we need to understand the powerful machinery that caught it, the Italian AML-CFT system. This isn't some new framework. It's got serious, decades-old teeth.
What's so fascinating is that long history of being proactive. Italy recognized this was a fundamental fight early on. They introduced the crime of money laundering way back in 1978.
Wow, 78.
Yeah. And crucially, they set up a fully fledged preventative AML system in 1991. That's actually before the first official AML European directive. They didn't wait for anyone else. They moved, driven by their own internal threat.
And that foundation, right, the fight against groups like the mafia, that seems just indispensable to understanding their success now.
It is. The core philosophy is follow the money. You disrupt the financial backbone to dismantle the whole organization, not just arrest the soldiers on the street. And they coupled that with another policy that's pretty unique. The mind the cash approach.
Precisely. Italy has always been uniquely attentive to the risk of cash. They've been setting and rigorously enforcing strict limits on cash transactions between private parties since 1991. And that's a profound choice. It explicitly forces transactions into the regulated, traceable financial sector.
But wait a second, doesn't that aggressive cash limit, which I know is much lower than in many other countries, doesn't that infringe on basic privacy for ordinary citizens? It seems like a major societal trade-off they made a long time ago.
Yeah, it is absolutely a major trade-off, and that's the whole point. It's an explicit prioritization of financial security and transparency over the anonymity of cash. The government essentially said, look, if you want the maximum defense against money laundering and terror financing, you have to sacrifice the convenience and privacy of large, untraceable cash deals.
And the success we're talking about today suggests that decision, while maybe controversial, gave them a huge systemic advantage.
It did. And that focus on tracking financial flows is amplified by the scope of their legal framework. It moved really quickly from targeting just a few specific crimes to what is now an all-encompassing offense.
Which gives prosecutors a huge advantage.
A massive one. Essentially, any crime that generates profits, from low-level fraud all the way up to complex international terror, can now be a predicate offense for money laundering. But here's the really powerful part. The technical mechanism. The conviction for money laundering isn't dependent on a prior conviction for that predicate crime.
So if I'm getting this right, the state doesn't have to wait years for the actual terror case or the fraud trial to be over.
Exactly. It makes prosecution incredibly robust and efficient. In this Hamas case, they don't have to wait until they prove the specific terror plot in court. They can hit them where it hurts, right now, by proving the money was laundered. They can freeze and seize those 8 million euros today, crippling the network, even if the main case takes years.
And behind all this law is a vast machinery of centralized data and enforcement. Sounds like a massive collaboration effort.
It is. The central hub is the Unità di Informazione Finanziaria, the UIF. That's their financial intelligence unit. Think of the UIF as the ultimate data analyst, taking in and analyzing tens of thousands of suspicious transaction reports, or STRs.
But it's the cooperation that makes it work.
It's the seamless cooperation between the Ministry of Economy and Finance, the UIF, and the investigators on the ground. The Guardia di Finanza, the GDF. That's a militarized police force that's just responsible for financial crimes.
And they don't just rely on people reporting things. You mentioned a tool that gives them like total financial visibility.
That's the key differentiator, the centralized register of financial accounts. This register, held at their revenue agency, it tracks essentially every single bank and financial account in the country. It's used aggressively for tax evasion and, critically, for AML-CFT investigations. That database is an enormous, potent tool for government oversight. It lets GDF rapidly map out entire criminal or terrorist networks just by following the transactions.
Okay, so here's where we see the results of that whole system. This proactive surveillance, it translates directly into massive, real-world results that stop criminals cold. And we have the numbers to prove this is working on an industrial scale.
The first indicator is just the level of compliance you get from the banks, the financial services, the legal professionals. The volume of suspicious transaction reports has just shot up from about 113,000 in 2020 to around 155,400 in 2022.
That kind of growth, it shows the private sector is really functioning as the state's early warning system.
It is. They're actively policing the financial landscape.
And the sources pointed out a surprisingly crucial role played by a specific profession. It wasn't just the banks.
No, it's the notaries. They are key gatekeepers in Italy. They file a staggering 90% of all the STRs submitted by legal professionals.
90%. Why is that so significant?
Well, notaries are mandatory for almost every major property transfer, corporate merger, or big asset sale. They sit right on the front lines where huge amounts of capital are moved, legally or, sometimes illegally. So having them as active collaborators adds this massive layer of transparency to high-value deals.
But the real metric of success isn't just the number of reports, right? It's the value of the assets they actually seize.
Absolutely. And the investigative activity from the Guardia di Finanza has delivered jaw-dropping figures. The amount of seized assets, it jumped from 525 million euros in 2020 to a shocking 1.335 billion euros in 2022.
Wait, to put that in perspective, going from $500 million to over $1 billion seized euros in just 2 years, what does that tell you about their success rate?
It tells you the system is getting smarter and that the centralized data is working. It suggests they aren't just catching small local crimes anymore, they're successfully mapping and intercepting these huge, complex financial operations. Exactly like the Hamas network. When the state can reclaim that much criminal wealth, it's truly dismantling the organizations.
And that same efficiency is mirrored across other agencies, too. The Anti-Mafia Investigative Directorate, the DIA, they saw assets seized from these kinds of investigations soar from 19 million euros in 2020 to 207 million in 2022.
The state is just effectively defunding organized threats across the board. And this capability, it extends internationally. If you want a wider measure of their commitment, look at their actions on sanctions. As of December 2022, Italy had frozen 2.7 billion euros in assets tied to EU sanctions against Russia and Belarus.
Wow.
That robust capacity to freeze assets so quickly is not an accident. It's the direct result of building this framework that, the 2016 FATF Mutual Evaluation Report called a mature and sophisticated AML-CFT regime. There's international consensus that they're effective.
So if we connect this all back to the bigger picture, these Hamas arrests really highlight a critical and persistent global vulnerability. Nonprofit organizations, NPOs.
Yes. Terrorist groups actively exploit the legitimacy and the trust that we put in charitable giving. They use it for funds and for logistical support.
And that veneer of humanitarian aid is exactly what this network was banking on. The sources detail how the suspects funneled the funds through these complex triangulation operations.
It involved multiple international bank transfers, intermediary organizations abroad, all of it designed to hide the origin and the ultimate destination of the money. They were trying to bypass Italy's strict controls.
And this wasn't an easy case to break, was it?
Not at all. The evidence that tied the financial transactions to the actual terror group was extensive. We're talking intercepted communications, detailed military training documents, and even photographs showing the suspects in combat gear standing right alongside Al-Qassam Brigade's members. This was sophisticated infiltration.
Which brings up this immense regulatory challenge. You have international bodies like a Financial Action Task Force, FAPF, right? They require countries to protect NPOs from abuse, but they have to use a focused, proportionate, and risk-based approach.
The RBA. And the tension there is immense. It's constant. FATF is always warning countries against regulatory overreach. They specifically say security measures should not unduly disrupt or discourage legitimate NPO activities.
Right.
So if a regulator just classifies all NPOs as high risk, that's not consistent with the RBA. And it leads to huge problems like financial exclusion or de-risking.
Yeah.
That's where legitimate humanitarian groups, especially ones in conflict zones, lose their bank accounts because the risk to the banks is just too high.
So on one hand, you have to cut off terror funding, but on the other, you risk stopping vital aid from reaching civilians because the regulations become too much of a burden. That's a real tightrope walk.
Precisely. And the Italian case proved that terror groups actively target that vulnerability. This puts a huge burden on the NPO sector itself. They have to self-police. Vigilance is critical.
So they need better internal controls.
Good practices are non-negotiable, especially for groups operating internationally or in high-risk areas. They need to know who actually owns, controls, or directs the NPO's activities. They have to verify the good standing of any partner organizations. Their resources are just so easily diverted, and these arrests show that terror groups are waiting to exploit the good faith of donors.
So what does this all mean then? I think the Italian case demonstrates a powerful reality. When governments really commit to rigorous, proactive financial controls, those systems can successfully take down sophisticated international threats. They can stop charity funds from fueling terrorism. And the success isn't theoretical. It's visible in the billions of euros seized, the networks they've disrupted.
And that brings us to the core question this success leaves for the rest of the world. Italy's long-standing triumph relies heavily on centralized financial control, those explicit legal cash limits from 1991, and that pervasive register of all bank accounts that gives the government total visibility. These are the tools that made this takedown possible. So the question for you to think about is, should this tangible evidence of security success force other democratic nations who are facing similar threats to reconsider their traditional positions on civil liberties, specifically around financial privacy and the anonymity of cash? Should they adopt Italy's more aggressive, restriction-heavy approach for the sake of public safety? It's a fundamental debate between the priority of financial freedom and the priority of national security.